Greetings to you all. Welcome you all to Chatmaster FX. Your boy Chatmaster here. Today we are going to look at journal article number 4, which is the basic market structure. This is actually abbreviated as BMS. So let's go straight into the business of today. So in this journal article, we are mainly going to focus on two categories. We are going to look at the reversal market structure and the continuous market structure. So these are the basics that we need to understand as far as we are doing this course at Chatmaster FX. You often limit these things, so you need just to have a general understanding of these things, so that when I talk about these things, you don't get confused of what I will be saying. So let's go to the definition of terms. We are going to look at caps. You often see this aspect, and for those who have actually watched my videos before, they have heard me talking about the cap area. So I decided that I have to make these things clear to you, so that when you hear me talking about cap areas, you will not be surprised and you'll be knowing what I really mean when I'm saying that the price is actually on a cap area. So caps occur at the top of a pole where the market shows some signs of indecision. So generally we are saying that the price is actually going maybe to the upside with great momentum. Then it reaches a point where the price is no longer moving with that momentum. So the price will be doing some consolidation and the price will be flagging there. So once the price starts to flag, then definitely the price may end up reversing. So that's what we call a cap area. So that's what we call a cap on price. So caps only occur on the RBD and on the DBR, which means caps, you can only see them on reversal market structure. So you need to understand that. So the price often flags on the top of a pole. This is where the institutional traders either begin to add long positions to take price higher, or begin to add short positions to turn price. Hence, caps are simply excellent places to look for the directional change of price. So you need to look for these caps. They helps you to see where the institutional traders may be able to turn price. So you need to look at those things as you will be trading. So let's go to reversal market structure examples. So under reversal structure, we are going to look at the drop base rally and the rally base drop. So these are the two examples of the reversal market structure, and we are going to look at them in a more detailed manner. So let's go to the continuous market structure. As you can see on the continuous market structure, we have two types of continuous market structure. We have the rally base rally and the drop base drop. So which means this trend is actually continuing. So when we are looking at continuing market structure, we will be looking at these things. So the anatomy of the BMS. Now, on the anatomy of the BMS, as you can see, to our left side, we have the continuous market structure. To our right side, we have the reversal market structure. So guys, you can see here we have the RBR on the continuous market structure, and we have the DBD. So when we are talking about a rally based drop, we are saying that the price is coming from this side and it may actually make a rally. This is what we call a rally. A rally is simply an upward movement of price. So price actually made a rally here and it came to this area. It started to do some form of consolidation. Started to do some form of consolidation. So this is actually a sign that the price is actually making an indecision. There's no indecision here, so you don't know what is going to happen here, whether the institutional traders are going to put the price to the upside or to the downside. So here we can see an example where the market is rallying up and it created a base. So on that consolidation, that's where we say the market has got its base. So this is an example of a RBR. So this is a rally, base rally. So we go to example number 2. We can see here when we are saying that the market is actually making a DBD, we are saying that the market drops in price, which means the price is actually moving to the downside. So once the price moves to the downside, you can see that the market starts to do some form of consolidation. So once the price makes some form of consolidation, it actually creates a base, and this is where the market is making a decision. It's indecisive. So we don't know what can happen here. Maybe the institutional traders may take the price up, which is rally, or they may actually decide to continue going along the direction of the market structure. So that's where we end up having a drop, base, drop. So these are the 2 examples of the continuous market structure. So let's go and look at the reversal market structure. So as you can see on the reversal market structure, you can see here we have a rally here, we have a rally, and we have a cap on price, which is our base, and we have a drop. So take note that caps only occur on the RBD and on the DBR, which are some examples of reversal market structure. So when we are talking about continuous market structure, we can only refer this as a base, but here we refer this as a cap on price, or we can call it a base. Then we can see on this example we have a drop in price, we have a base, then we have a rally. So in this example we can see that this is what we call a cap on price. So this is cap on price, guys. So these are the 2 examples of reversal market structure. So guys, you need just to look at these things, guys. You have to just to look at these things. They are very, very simple. So these are the building blocks of all the standard operating procedures that we use at Chartmaster FX. So you need to have a general understanding of these things. So let's go to chart examples. So example number 1, we are looking at the RBR, and we are on crash 1000. So here on crash 1000 we can see that the market actually made a rally here, and the market made some consolidation, which is what we call our base. And once the market made a consolidation here, we see that the market actually went to create a rally again. So the market made a rally, base rally, which is what we call an RBR. So this is an example, guys, of an RBR. As you can see, this is how you can be able to identify these things on the live market. So let's go to example number 2. On example number 2, we are on boom 1000 index on the H1 time frame, and you can see, guys, that we have a drop in price, and the market made some indecision here, and that's where the base is actually formulated. Once we have a base and the price continued going to the downside, so we ended up having a drop, base, drop, so which is abbreviated as DBD. So this is an example of a DBD. So you need to look at these things. So these are the basics. Of the market structure. Let's go to example number 3, where we'll be looking at the RBD. So guys, on the RBD here, you can see that here we have a rally in price, then we have a cap on price here, then we have a drop in price. So we have a rally base drop, which is what we call RBD. And what you need to look for, take note how you draw these caps. As you can see, the cap area, you need to draw it properly. You look at these lower lows here and the higher high here, then you can be able to draw. You identify the lower low and the higher high, then you draw your cap zone. So the same applies here. We had a rallying price, and we had a cap on price here. You identify your lower low, you identify your higher high, then you draw your cap on price area. So we ended up having a rally base drop. And another example here, we have a rally. You identify your lower low, your higher high, you draw your cap on price. So here we can see that we had a rally base drop. So this is example number 3. So these are the basics, guys. These are just the basics that you need to understand in the market. Okay, so let's go to example number 4. On example number 4 here, on boom 500 index on H1, we can see that here we had a drop in price, and you identify your lower low and you identify your higher high here. Then you can be able to draw your cap on price. So once you draw your cap on price, so we know you have a drop base rally. The same applies here. We have a drop in price, and you identify your lower low, your higher high, then you can draw your cap on price. So we had our DBR, and here with the drop in price, cap on price here, identify your lower low, identify your higher high, draw your cap on price area. So here with the DBR. On this example, we have a drop in price, and you identify your higher high and your lower low, you draw your cap on price, and the market did a DBR. Another example here, we had a drop in price, you identify your lower low, you identify your higher high, you draw your cap on price, and we finally had a drop base rally. So guys, these are the examples of the continuous entries and the reversal entries. So guys, this is basic market structure. And you need to understand this, so that when you are hearing us in the standard operating procedure talking about RBR, DBD, you will not be confused of what we are saying. So this is the jargon. That we use at Chartmaster FX. So guys, thank you for listening to this video. Make sure that you like and subscribe and hit the notification bell, so that you can be able to see more videos that we are going to be uploading. So yeah, your boy Chartmaster here, signing out.